How familiar are you with the IRS Dirty Dozen list? You might be missing out on crucial information that could protect your hard-earned money from falling into the trap of tax scams and avoidance schemes. For more than 2 decades, the IRS has been releasing an annual Dirty Dozen list. This list identifies the top tax scams and avoidance schemes that taxpayers should be wary of. The list for this year covers a wide range, from employee retention credit claims to the misuse of fake charities. Some of these items on the Dirty Dozen list involve outright fraud. An example of this is identity theft through a method called spear phishing. Other items are related to tax credits or deductions that are perfectly legitimate, such as conservation easements. However, the IRS has observed that these deductions are often prone to abuse by taxpayers. The Dirty Dozen list serves as a warning system. It showcases the red flags that catch the IRS's attention and can lead to aggressive enforcement action against those who claim such deductions or credits and those who promote them. When a new item appears on the Dirty Dozen list, especially if it's right at the top, it's a clear sign that it's a matter of high interest for the IRS. Take the Employee Retention Credit, ERC, as an example. It only made its debut on the list in 2023, and the IRS immediately placed it at the top. The top position is a clear signal that the IRS is making the fight against fraudulent ERC claims a high priority. However, it doesn't mean that you should avoid claiming the ERC if you're entitled to it. It just means that you need to keep your records straight and ready for any potential audit. The IRS isn't just releasing the Dirty Dozen list and leaving it at that. They're actively encouraging the public to report individuals who promote improper and abusive tax schemes, as well as tax return preparers who intentionally prepare incorrect returns. To further this effort, the IRS established the Office of Promoter Investigations in 2021. Their goal is to identify and put a stop to promoters and enablers of abusive tax avoidance transactions. Using a strategy or scheme from the Dirty Dozen list is like painting a target on your back for an audit. If the IRS concludes that taxes were underpaid due to the use of such a strategy, it can lead to substantial tax penalties. The fact that the strategy was on the Dirty Dozen list can make it very difficult to avoid these penalties. The IRS can impose these penalties on taxpayers, tax preparers, and promoters. Avoiding the accuracy-related penalty is possible if taxpayers can prove that they had reasonable cause for the underpayment and that they acted in good faith. However, if a taxpayer adopts a strategy or scheme listed in the IRS's Dirty Dozen list, demonstrating good faith becomes an uphill battle, if not an impossible one. So the next time you come across a tax scheme that sounds too good to be true, remember the IRS Dirty Dozen list. It might just save you from a world of trouble.